The slide in the US market has spilled over into the Australian market, I think primarily because of rising interest rates, rising yields, and rising discount rates as a result. Rising interest rates in the US offer a lower risk, higher yielding investment opportunity for US shareholders. Oftentimes that rising yield often spills into other developed markets as well, where the US Treasury rate is seen as a benchmark in Australia and other countries. And a rising interest rate means that you can get a higher yield at lower risk, and therefore are going to discount the future cash flows of your equity investments at a higher rate. And that leads to a lower valuation that you're willing to pay for stocks and the slide that we're seeing in today's share. We at Morningstar thought the Australian share market has been overvalued for some time. Even just yesterday, we thought on average it was about 9% overvalued. On a median basis, it was less so. It was about 2% overvalued, suggesting we see significant overvaluation in areas like technology and mining. But nonetheless, we're not terribly surprised that the market would eventually have pulled back to some degree. I think the effects are certainly scary, and it looks quite red across the screen today. However, we would encourage investors to stay in it for the long haul and not to panic. Our fair value estimates, despite suggesting there was some overvaluation, are based on long-term assumptions, and we're already based on a higher discount rate. We use about a 4.5% risk-free rate, which is substantially higher than the rates that we've seen recently. So we're in it for the long haul. Our fair value estimates are in it for the long haul. We would recommend investors stay in it for the long haul as well. Despite the fall in today's share market, really here and in the US, we think no matter what the valuation is in the overall market, there's always pockets of opportunity. In fact, when you see a sharp slide in the overall market, it often means that stocks that we think are high quality, but perhaps were fully valued, could now be offering a margin of safety, one that allows an investor to capture a higher than required rate of return given others' short-term fears in the markets. Our best ideas list is probably one of the best places to start. Names like A2 Milk, names that have slid quite sharply today, we think remain undervalued. We remain confident in the long-term banking picture, even though, of course, there's some short-term volatility and concern there. And it does give you the opportunity to continue to invest, we think, in undervalued wide moat names like InvoCare. So our star ratings incorporate long-term valuation assumptions that are less influenced by the day-to-day gyrations of the market. I don't think anyone really knows how long a correction can continue for. Predicting the stock market on a day-to-day basis is often a fool's errand, in our opinion. But when the market offers you a slice of cake, we think it's foolish to turn it away. We can't guarantee the market will continue to go up. We can't guarantee it will continue to go down, certainly not in the short term. But over the long run, we think investors should demand a required rate of return that's appropriate for the shares they're investing in to compensate them for the risk that they're taking. There's always risk, and there'll always be volatility in the stock market. However, when the market is offering a decent margin of safety, particularly on high-quality names, we think those in it for the long run have an opportunity to make money. Personally, days like today don't feel great. I think we as investors are all in it together. There's a lot of encouragement going on between the analysts today to make sure we encourage each other to stay in it again for the long run and make sure that we understand that we are focused on the business health and the economic moats of the companies that we're rating. We try not to let Mr. Market dictate to us by his price screaming what the value of the stock actually is.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.